Well, joining me now to break all of this down is economist Shamabeel Yaqub. Hi there, Shamabeel. Thanks so much for coming on with us tonight. A lot to break down here, lots of numbers, not some good ones. Starting with employment, what should we read into this drop in job vacancies?
Yeah, look, businesses have been looking for workers and have been finding it really hard to recruit them because there's just not enough people unemployed out there. But what we've seen since the middle of last year is that businesses are advertising less. And that's really because they're getting less certain about the economic outlook and they're less confident about taking on more people.
Okay, so are we going to see unemployment rise, do you think?
Look, I think it's going to be fairly slow. And the reason for that is because businesses have had such a hard time hiring people and hanging on to people. I'd be very surprised if they were quick to fire people. So rather than seeing lots of job losses, I think what we're going to see is businesses are less likely to expand their workforces and less likely to replace people if they choose to leave.
Okay, what about the pessimistic business outlook? What is the impact of so many of our businesses expecting the economy to deteriorate?
Yeah, look, a little bit of context. The pessimism wasn't just pessimistic. It was the most pessimistic we've seen in this survey, which started decades ago. So this is pretty grim stuff. We've never seen businesses so dark about the economy in the history of this survey. So what it's really telling us is that almost all businesses are seeing the economic outlook being quite negative. And that's really because we've had lots of disruption in the last couple of years. But surprisingly, we've had a very strong economy. But all those positives are now turning around and we're starting to see the slowdown. And it looks like it's going to be really painful in 2023.
Okay, we're already seeing signs that demand is slowing. So is this all pointing to a recession?
Yeah, look, I think we're pretty much in recession already. Already before Christmas, we had seen that business and consumer confidence was extremely low. We saw through the Christmas period that people weren't spending quite as much as we would have expected them to, given how pent-up demand there was in the lead up to Christmas. So we are going to see a pretty tough year this year. And for all intents and purposes, I think the recession has begun. But worse is still to come because for those who have mortgages, we know that they're going to be refinancing at much higher rates, going from between 2% and 3% a couple of years ago to between 6% and 7% this year.
Yeah, that is really going to start to bite, isn't it? But a slowing economy, in theory, should reduce inflation, which should reduce the interest rates. This is all sort of part of the grand plan, isn't it? How do you see that playing out?
Well, it will happen, but everything happens with a lag. So when the Reserve Bank was raising interest rates last year, it was really raising it last year to reduce inflation this year by reducing the economy and economic activity. So we are going to start to see that. We've seen global pressures come off, global commodity prices, shipping costs, the supply disruptions, they have eased. The big risk for this year was very much around whether we would see big increases in wages and labor costs. And given how weak the business sentiment is, given that businesses are looking to hire far fewer people than we had seen last year, it is very unlikely that big increases in wages are going to happen this year.
Okay.
So I expect inflation will come off by the end of the year.
Okay, Shamabeel, thanks so much for your analysis tonight.